Hey there, this is attorney Sarah Holmes of Holmes Business Law P.C. We are a law firm located in Philadelphia and the suburbs that provides general counsel services to business owners. Now, one question we get from clients all the time, not necessarily legal in nature, but that we sometimes can guide clients with is, how do I get financing for my business and what type of financing can I get? So that is kind of a complicated question. The answer is really, it depends. If you are a startup, meaning you are starting your own business from scratch, like you're not buying an existing business, you're not doing a franchise, something like that, most of the time, the financing you will get is not existent. It doesn't exist. There's not really standard financing for just plain startups. You're going to want to think about things like low interest credit cards. Like, can you get a 0% credit card if you need startup fees? Do you have strategic partners, AKA investors that you can team up with to get startup capital for your business? Can you get money out of your home, like a HELOC, something like that? That's kind of like a scarier answer because obviously you don't necessarily want to put your house on the line for a brand new business that's untested. So you got to be careful where you do get the financing with. The real thing you want to start with is a solid business plan. We always suggest using something like liveplan.com, which is some cloud software that will automatically run your financials for you, show you your projections. You can go 3 to 5 years out because you really need to see at what point you would get revenue in, what point you might break even, what point you're going to run out of cash. And you need to anticipate those things when you start up to make sure that you have enough money, keep bankrolling it, and to stay in business. Because again, as a startup, you're going to find it very difficult to get any type of formal money from a bank. You may consider something like a personal loan, like a bank, if you have good credit, may loan you money personally. Again, you are putting your personal credit and your personal assets at risk. Really, in the grand scheme of things, it would be very difficult for you to start a business without putting some aspects of your personal financial life at risk. Sometimes that's just what you have to do. Sometimes it's also the kick in the butt that you might need to make the business work because you are having your own capital and your own money and assets at risk. So it's not always a bad thing, but definitely, it's not without risk, but that's just how starting a business goes. Now, if you are starting a business and you're buying a franchise, maybe you're buying an existing business, now it's potentially a different ballgame. Now you may be able to get an SBA loan. You may be able to get a commercial loan from a bank. It just depends on the strength of that business that you're buying. The stronger that business is, the more the cash flow looks good, the longer it's been established, the more likely it is, combined with usually a good personal credit history as well, the more likely it is that you can now get financing for those types of businesses. The only thing you have to be careful with that is to make sure you get enough financing. They may loan you some amount of money to buy the business, but maybe they're not loaning you any extra money for working capital. Working capital is going to be, once you get into that business, the money that you need, again, to keep the lights on while you take it over, while the transition's going on, to make sure you can keep the business around. So there are a lot of ways to finance a business. The newer you are, the more difficult it gets. Once you've been in business for about 3 to 5 years, now you should start looking at things like a business line of credit. That can always help you if you run into tough times. You should always have a really great relationship with a business banker. You can always have your money in multiple banks to kind of hedge your bets against who's offering the best loan terms, where is my money, also hedging against bank failures. Having multiple accounts in different banks is not a bad idea either. Once you're in business again for a couple of years, you might be able to get SBA loans. Those are government loans that typically have better interest rates and longer terms than maybe a strict bank commercial loan. So the longer you go along in business, the easier it will be for you to get some financing. And as COVID showed us, unfortunately, you want to really be ready with financing before something bad happens, before something like a market crash and they tighten up all these credit restrictions. Always have something in your back pocket to go with. So if you ever have questions or you need your business financing documents evaluated, feel free to reach out to our office. Our number is 215-482-0285. Thanks.